Eric Mwathe with Mwathe.com with part 1 of the US market analysis for the weekend of October 1st and October 2nd, 2016. Let's take a look at markets here with about 1 hour to go on Friday. You can see markets are called higher. Let's call it about 1%. Let's take a look at those charts. If we take a look at the Nasdaq from a weekly perspective, this is week number 2 of our breakout above the previous weekly closing high at 5249.50. So this is a nice follow through. The weekly chart showing a lot of strength. And don't forget, if you go back to the previous all-time weekly closing high, the market did move above that. So we are still above those two levels. On a weekly chart, the market looks great, at least as far as the Nasdaq is concerned. Now, if you take a look at the daily, one can see that as the market has been making an improvement in price highs, the RSI has been showing resistance on this line. So that negative divergence eventually does lead to a market here that could easily pull back. And also you can see the formation of a wedge, something we've seen in many markets across the globe. So there's a wedge on the daily chart, which is why the market has been volatile, coming and hitting both sides of these lines. And also we can see a wedge here. So generally speaking, as long as we're within this wedge, tough to tell which way the market wants to go. Of course, a breakout above the wedge would be bullish, and movement below that wedge would obviously be bearish. So we have to wait for the conclusion of that on this daily chart. As we come to the end of the month of September and we begin a new month on Monday, we can see that the Nasdaq continues to hold above the previous monthly highs. So this breakout on the monthly continues. Again, the monthly chart currently looks good. The only issue is, as we saw in this past month, if the market stays down for the month of October, which would mean that the chart would look something like this, an improvement in monthly price highs. And if the market is down for the month of October, this would show negative divergence on the monthly RSI, which might suggest that that is when the market turns negative. So we have to watch for this. A down market would confirm negative divergence, and that's not what you'd like to see. And one of the reasons for this is, if you take a look at this long-term monthly chart for the Nasdaq, if the RSI stalls around here, this is where markets have been running into serious problems over the last couple of years, going back in fact to, let's say, the 2000.com bust. So during this period here, the market cracked below this level. Also there was a trend line break here, and of course we went into a major bear market. We also broke through a trend line here corresponding with the highs of 2007, and of course we went into another bear market. So what I'm trying to say here is, month to month, resistance around current levels here is not good. So we have to watch for this. If the market turns down in the month of October, that might not be a good signal. If you take a look at the Dow on a weekly chart, it did find support exactly where it needed to find support. So the RSI held support, which is good. It's a sign of a market that is at the very worst stabilizing after a pullback. So that's good on the weekly, and also coming and bouncing on this 50 level on the weekly RSI, just like it did here. And over the last week or so, the market did bounce on the same RSI 50 level, which might explain the recent bounce this past week. Also, if you take a look at the the weekly closing lows, weekly closing low here in February, weekly closing low here in June, and the recent weekly closing low for early September, you get a nice trend line. Should look something like that. And as long as markets are above this trend line, markets should be stable, if not bullish. And also we need to continue watching for this support. As long as the market is holding on those two lines, the price support is holding, RSI support is holding, the market continues to be favorable, if not bullish. Just like we saw for the Nasdaq, we see another wedge on the Dow. The price is forming some type of a wedge. Got bottom side support and also top side resistance. So we are stuck in this wedge. Eventually movement above or below might dictate the next major move. Also the RSI is showing a wedge that is just about to conclude. So you can see we are stuck in a range, all this confusion taking place. Eventually we either break out above the wedge for a move higher, or we break down for the next move to be lower. So we have to wait for the market to tell us whether we get a break or a breakdown. With the market trading at the highs of Friday's session with about 50 minutes to go, take a look at the hourly charts for the Dow, and we are coming back to test the top side of this wedge. So top side resistance has been holding the market down, and we got bottom side support that has been giving the market support over the last week or so. So here towards the end of Friday's session, the market is back to that level, resistance on this level, and we can start seeing that the next hour to hour, day to day movement might be lower. This is the Dow. Take a look at the same situation developing with the S&P 500 on the hourly. So SPX coming back to test the top side of this trend line on the hourly chart, and also you can see bottom side support. So we are within a wedge. Eventually we either break out for the next swing trade to be higher, or we break down for the next swing trade to be lower. Also we can take a look at the 30-minute chart for the S&P 500, which should be similar. Here we can see top side resistance coming into play at the highs of Friday's session, and yet we have nice bottom support. So there's a wedge on both the hourly and on the 30-minute chart. Take a look at the Dow's 30-minute chart, which is similar. Keep in mind the daily charts continue to be in a wedge. So you got top side coming to be tested right there, and after we had seen support on this wedge when the market hit that level twice and did find support on Thursday. So we are stuck in that wedge. Eventually we might have to resolve either breaking out for a nice swing trade higher, or breaking down for a swing trade lower. On the monthly chart for the Dow, we are still faced with this situation where the market made an improvement in monthly closing highs, but we see that this came at the expense of the monthly RSI. Right now this monthly RSI is failing to hold above 61.8, and as long as this line is being respected by the market month to month, this could actually be already a major sell signal for the markets. So failure to move above this RSI line, this negative divergence, could eventually set the stage for a major correction. On the monthly for the Dow, we should watch this recent all-time monthly closing high. For the Dow, the level to watch there is 18,432.34. A breakout above that level would be bullish. For the S&P 500, the level to watch is this recent all-time monthly closing high, and if the market is to see higher prices, if the bulls are to be in control, they need to hold the S&P 500 above 2173.60. Now unfortunately the problem here is that what we are seeing here is an improvement in price highs right now. Keep in mind monthly charts are coming into play as we begin the new month of October. We had an improvement in price highs here over the last couple of months, but the RSI really has not really made an improvement. So this negative divergence continues to be a problem in the market. And actually, if you take a look at this resistance level on a long-term monthly chart, this is not where you'd want to see resistance, because take a look at the long-term monthly chart, just like we discussed for the Nasdaq. If you draw a line around current levels where the RSI is, so that line should be somewhere around there, you can see it coincides with other major sell signals over the last, let's call it 10 years or so, maybe going back even more than that. We can see resistance here, or a break below the red line also corresponded with this RSI break, and that was true because we can see the market went on a major bear market for the SPX. Again, we come back in late 2007, we break below the red line, which was also a trendline break area. And of course, the market came off the highs of late 2007. We went into a major bear market, and we had resistance on this red line during the highs here in 2011, and the market did see some type of a pullback. So we are coming back here, and if we cannot move above this level month to month, that creates a scenario where we can start speculating that the next major direction in markets might have to be down. That's why I keep saying that the market needs to break out on the S&P 500, and convincingly so. Otherwise, this could create a long-term problem for market bulls. So in conclusion, we are stuck in a wedge. As we've been discussing throughout the course of this video, we seem to be stuck in a daily wedge that is about to conclude. Lots of confusion, but eventually movement either above or below will dictate the next swing trade. Enjoy the rest of your weekend. Otherwise, for subscribers, be on the lookout for part 2, where we discuss stock ideas and also we take a look at commodities. Eric Muather with Muather.com. Good luck. Good luck. Blessings, peace, and blessings. Riches, blessings. Mwah.